The new Christmas edition of the Ryder report has a substantial focus on what's going on with property prices around Australia. And I emphasise that we look at what's really going on with property prices across Australia, as opposed to some of the very unreasonably negative rhetoric that we're seeing in mainstream media. One of the things I do in my editorial in the November-December edition of the Ryder report, as I look at some of the predictions that's been made over the last 10 to 15 years, it's been remarkably common over that period of time for various forecasters, for various reasons, to make very, very major doomsday forecasts about major collapse in Australian property prices. And what stands out about all of those forecasts, and they've been remarkably common over the last, say, 10 to 12 years, is that they've all been spectacularly wrong. And we're still having that happen now. The usual suspects have emerged in recent times to forecast a big decline in our prices. Most commentators, most sensible, respected analysts and commentators are actually predicting other things, but the ones who are making the big negative forecasts are the ones who are getting most attention in our very negatively minded mainstream media. So I thought it was instructive to look at some of the forecasts that have happened in the recent past and to emphasise just how wrong they have all been. In the feature article, we look at some of the more reasonable, moderate forecasts that are coming from some of the more respected commentators and analysts about what's expected to come up with property prices in our major markets in 2019. Domain, for example, which is the nation's biggest data source for residential real estate, is forecasting that the decline in prices in Sydney and Melbourne is expected to bottom out around mid-year and then return to small to moderate growth, and are expecting quite solid growth in house prices in the other 6 capital cities. There's also in that article a response to yet another forecast of 40% price decline by Steve Keen. He's been predicting that every year for the last 10 years and has been wrong every year. And a number of major economists have come forward and suggested he's going to be wrong again, including CommSec's Craig James, Sarah Hunter, who's the chief economist for BIS, Oxford Economics, and AMP Capital's Shane Oliver. Craig James from CommSec says that there's no oversupply in the Australian market. Generally speaking, affordability to make debt repayments remains strong, and the net worth or wealth of Australian households is at record highs. He also points out that the good news is that government debt is low and that the federal budget is near balance. There's also some fairly moderate to positive forecasts from other respected analysts such as Paul Bloxham, who's the chief economist for HSBC, and also Brian Hertzer is the CEO of Westpac. Bloxham says that what he sees in the 2 biggest cities is an orderly and quite moderate downturn in prices with no evidence of panic or forced sales, as he's expecting the decline, similar to Domain, to bottom out around the middle of 2019, but with growth happening in the smaller capital cities and some of our leading, in particular, some of our leading regional centres. Also look in the prices and rent summary that we feature in each edition, each monthly edition of the Ryder report, a comparison of what's happening with prices in the last 12 months according to 4 different sources, because it's always interesting to note that the figures from different sources are often different. In some cases, they absolutely contradict one another. But where they do tend to agree in terms of what's happened in prices this year is that Hobart and Canberra have both had strong growth in their house prices throughout this year. Adelaide and Brisbane have had small to moderate growth. And according to some sources, the price decline that's previously happened in Perth has come to a halt. And one source, the Real Estate Institute, is now seeing a return to minor growth in the Perth market in the last couple of months. And we also have one source seeing Darwin market returning to price growth, although the other sources still have Darwin a little bit in the negative. In the one of the featured location segments, we look at what's happening with the top end markets in 3 of our smaller capital cities, because I think that this is quite instructional. Up cycles are usually led by the top end, so it's interesting to note that in 3 cities, Perth, Adelaide and Canberra, where overall we're seeing only moderate to solid price growth. Canberra's been higher than the other cities. Adelaide's been very moderate. Perth has had prices until recently going backwards. But it's interesting that in each of those three cities, the $1 million suburbs, those suburbs of median prices above $1 million, have pretty much all shown strong price growth in the last 12 months. In many cases, double-digit growth in their median prices. And I think that this is the beginning of a better cycle in those cities which have to date been either just chugging along moderately, or in the case of Perth, going backwards for several years. But put together with other evidence, I think that the upturn in the top end of those three markets is a sign of a stronger cycle that we're going to see playing out in 2019. We have, as usual, in each edition of the Ryder report, a state-by-state section where we focus on what's happening in the major cities and also some of the regional markets. I point out in the Sydney, New South Wales section that according to most sources, media is overstating the degree of the price decline in Sydney, and also point out that Domain in its forecast for next year expect the decline in Sydney prices overall to come to a halt about the middle of 2019. I also have some focus on what's happening in Adelaide, and note that two of the major data sources, CoreLogic and Domain, note the steady and consistent performance of Adelaide over the past 4 or 5 years, that they've labelled Adelaide very much the quiet achiever of capital city Australia. It doesn't get a lot of attention, but it keeps chugging along, producing small to moderate price growth year after year, and we're expecting bigger and better things from Adelaide moving forward because of what's happening and coming up in the South Australian economy. So that and a whole lot more in the new Christmas edition of the Ryder report. It's a great way to find out what's really going on in property markets around Australia, as opposed to the extremely sensationalist negative rhetoric we commonly see in mainstream media. So make sure you get and read the latest edition of the Ryder report to be well informed about property markets across Australia.